Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May the 15th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We create two main hypotheses, Hypo 1 and Hypo 2. We do not know what the market's going to do. We can only wait to see who takes control and then execute the plan that best suits the market. And then we create Hypo 3 and Hypo 4, which are our expansion or trend type scenarios, and execute those once we break key levels. If you're watching this video, you can flip ahead. The hypos are usually about 15 minutes in. I'm trying to shorten these videos, but it's important to have the context of why I have my levels where they are and why my hypos are what they are. Before we get started, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you're interested in checking out the room, send me an email at quantumleapfutures@gmail.com. There is no website, there's no blog. We do everything live here in the go-to. Then we do live trading and analysis during the course of the trading day. So let's deal with yesterday. Yesterday, our hypothesis, Hypo 1, was a open auction just out of range, a push down into testing the gap close, and somewhere between the gap close and the VPOC, finding buyers and rotating us up into the overnight VPOC at 35, and then basically chopping and going sideways. Hypo 2 was a open auction just out of range, a push up into that overnight VPOC, and then finding sellers and rotating us down and chopping inside of value. We kind of got Hypo 2, and it looked like it was going to be Hypo 3 when we went up and tested the 41.50 key line in the sand above, but we didn't break the key line in the sand above. That would have put us into Hypo 3. So we went a little bit higher than expected, took out the overnight high, and then we rotated down, fought the range high from Friday, then finally broke into the prior day and basically went sideways. So we ended up with Hypo 2 that went just a little higher than expected. Looking at news today, we just had the core retail sales came out less than expected, and sales month over month came out less than expected. So we have had a sell-off. The nice thing is that the market gave us a clue ahead of time. There's your impulse wave. Here's your zipper. The measured move was down to the 1950. And what did we do? We came down to the 1950, and we're continuing. We've just broken a key level, our key line in the sand, which was going to be our key line in the sand below, which was that 1850. So we're going to have to talk about that a little. In terms of other economic news today, we have Red Book coming out in 5 minutes, not a big one. Business inventories comes out at 10 o'clock. We've got NBA delinquency rates, which is tentative. NAHB housing market index at 10 o'clock. 11:30, we've got the four-week bill auction. As I said yesterday, there's lots of Fed speakers this week. We've got FOMC Williams speaking at 1 o'clock. At 4 o'clock, we've got U.S. foreign buying T-bonds and overall net capital flow and tick net long-term transactions. So not a lot more scheduled news, but again, with the Fed speaking, we could get some further action. So let's start with a basic thing I do every day, which is go to the macro. I use a simple candlestick chart. I start on a monthly. I use a 9 EMA and a 20 SMA. Why am I doing this? Well, I want to make sure I understand where we are in terms of the overall trend at each of the periodicities. What I'm looking for here is good slope, good separation. For the strength of the trend, is price paralleling the 9 nicely, or is it coming down and challenging the 9, or possibly breaking the 9 and the 20 and possibly seeing a trend change. 14 months of one-time framing up was violated in February, and in March, April, and May, we've been challenging the 9 EMA, but we're holding above it. The 9 is not violated until we get down into the 2643 area. So there's lots of room for us to come down and nowhere even challenge the upward trend that we're still seeing in the monthly. In the weekly, we were looking at a possible trend change, and then they took it back, and right now we're trying to hold above the 9 and the 20 and get this continuation pattern up. But it is struggling right now with this move down. Going to the daily, you can see that we're starting to see a stair step down, but now they've consolidated in that large value area, and we're back above the 9 and the 20 and looking at possible continuation pattern of the upward trends in the longer time frame. But we have created a technical gap that we talked about yesterday, and a move back down to test the 2700 would not be outside of the norm as a reversion to the mean before we continue higher, or they break through and we get a bigger breakdown. We just don't know yet. Going to the intraday, we were trending fairly nicely the last 4 or 5 sessions, and we've broken down overnight, and we're now below the 9 and 20 and seeing a possible trend change and a move likely down to test that 2703 area. And last but not least, just going to the 30-minute. You can see that we're in this downward trend and we're breaking down with a break below that key level. So let's take a look at the structure of the market. Just a little bit of narrative to give you context. We were in this long time frame upward trend for the last few years. We come up and we put in an all-time high. It is an unequalized all-time high. The RTH all-time high is 2883.50. The RTH all-time high is 2880.25, and this is typically not left alone. That will go up at some point in time and equalize that. And that's why I'm not thinking that even a move down into the 2400s is still not going to violate the overall upward trend on the monthly and means nothing in the longer time frame. We tried to hold value up here in the 2831, then they gap down, and we take a big move down into the 2500s. Actually, the fractal low is 25.29 put in the Globex, but 25.35.25 in the RTH session. We find our buyers, we come back in, we try to break out, and we failed to hold the 2800. We did come back up here to an area of price acceptance at the 2807. And then we fall back into this value area. This value area is huge. It runs from the 1850 down to the 2591.50. Just happens to be 89. Just happens to be near the low of the month. Our month low is down at 2591.50, and we've just been bouncing back and forth and traversing the value area with the microcomposite VPOC at 2669 area, but this area has a lot of undetermined fair value. Then we get this, we come up and we accept this 2969 area, sorry, 2669 area, and then we start to gap up and we break out of value and we go in and we put in the high that we put in yesterday at that key line in the sand above, which is up at that 4150 area, and rejected that, came back in. We were looking for a possible 2-day balance. I'm going to move both these profiles over, and I'm going to put a 2-day balance. On these 2 days, that balance is at the 28.75, right near the VPOC from yesterday. And overnight we've gone up and tested the 31.25, but they've pushed down and they've gotten below this 1850. So looking for us to move back towards the next target below, which is the 27.07.25, where we tried to hold value on the last attempt of the breakout, and possibly come down to that 27.03 area, which is the significant CLDN, down below that balance at the 0607 level. And right now we're trading in the 13. So key levels to pay attention to. This was going to be the key line in the sand below at the 1850. It's actually shifted slightly from the move yesterday, so it's now at 19. Just going to have to make that adjustments. That's what's something you want to pay attention to. Above, below, whether we hold this this 0650 or push through to the lower side of this distribution zone down to the 03.25 and below 03.25. Then I'm looking for the gap fill. The gap, the mid of the gap is 150, 27.0150, and a test of the 2700s. Anything below the 2700s, look for the month low to be tested down at that. I'm sorry, not the month low. The move down into this first CHVN and the value area low of this attempted breakout here at the 2691.75. And if that doesn't hold, the 2684. I think we're going to bounce again and fight this level and probably chop between the 28 and the 1750 area. So let's take a look at the overnight inventory. Overnight inventory is pretty much 100% net short, maybe 90% net short. And we've broken through that key level and come down and tested into the teens. We've got a multiple distribution, so this is a pretty strong move off of bad economic report. So this might change the context of the day. We still have opportunity to put in a new Globex low, so we'll have to watch for that. So let's just take our levels. First of all, this right here, which was, I'm just going to take this right off right now, and we're going to change this to 19. And it is going to become our key line in the sand above. I have to change all this around because context has changed. Our overnight low is no longer there. It's going to be moved down to the 12.25, which also happens to be a trade area. Our daily upside ATR is going to shift. Our 20-period full session average true range is running at 33.16 right now. So off of the 27.12.25, our upside daily ATR is going to shift down and come down to 27.45.50, where it was at 53. So just at the bottom of this this gap zone, and this is no longer key line in the sand. Well, it is going to be another key line in the sand above, so I will have to adjust that. This was going to be, we have a double distribution from yesterday, so this was going to be my over-under line this is no longer going to be my over-under line. My over-under line is going to be here at the 25 and a quarter, because that is what was the middle of the double distribution that we were in prior to this news breakdown. So basically, get above the double distribution before the news and back into yesterday's range. And actually, this got moved. And then our key line in the sand below is going to shift from this 91, and it's going to get moved up into this 98, which also happens to be our daily downside ATR target. So our daily ATR at 33.16 off of the high overnight at 27.31 and a quarter. So if we get below that daily, I'm looking for a bigger move down into the 96 naked VPOC and the 91.50. So let's talk about hypotheses. They have shifted, and I have to just switch a couple things around. But my main hypothesis is we're going to open auction out of range. We're going to have a gap. So if we're trading right here at the 15 area, and I'll have to adjust this on the open, and our close yesterday was 30.50. Our half gap fill is 22.75. And that's right near the naked VPOC, or the Globex VPOC. And I'll just put approximate because I have to adjust it. Okay, so hypotheses. Hypo 1, we've had a contextual change and a move down on news. So my Hypo 1 is going to be an open auction out of range. It's going to be a responsive buying up into the half gap. Somewhere, I'm looking at the first spot here at the 19, but somewhere between the 19 and the 25, I'm looking for sellers to step in, rotate us down through the overnight low and push down into the 650 and possibly come down and fill this gap. And then somewhere between the gap and the key line in the sand below the average true range, I'm looking for buyers to step and rotate us up and start rotating and going sideways around the 27.0650 area and basically close down here. That is Hypo 1. Hypo 2 is going to be an open auction out of range, a push down into taking out the overnight low, push through to the 0650, and somewhere between the 0650 and the gap, find buyers, rotate us up, fight the 19 area, and then push up and get a probe up into the 29 area, but closing somewhere around the overnight VPOC, around the 22.75 area. That is Hypo 2. Hypo 3 is going to be a gap and go, a open auction or an open test drive, test up into the 19, maybe to the half gap fill, find sellers, rotate us down into the gap, chop around here, and then break down. And my target for Hypo 3 is going to be down here at the 26.9150, maybe even a late day probe down into the value area high for the bigger picture down here at the 26.80. That is Hypo 3. Hypo 4 is going to be a take back day, open auction out of range, take out the overnight low, but fail to get below the 0650, push up into the range low, push up into the naked close and naked VPOC, take out the overnight high, and come up and break through this 41.75 and come up into the gap. This gap mid is actually the 61.8% retracement of this whole move down you'd have to go to the full session to see it. But the whole move down off of the all-time high at 83.50 down to the 25.29, the 50% retracement is the 27.49. So we kind of sliced up through the 50% retracement and looked like we were going to go get that 49 yesterday, but they failed at that key line in the sand at the 41.50. So that's what I'm looking at in the ES. Gold, well, we said that if gold didn't hold the 19 yesterday, that we are likely to come down and test the 1300. And I said that this 1304 is not likely to hold. The next test down to 1300 was not likely to hold, and the target now is down here at the composite VPOC at 1290.80. I've been looking for this move down to this level if we did not hold the 1304 again, that we would not likely hold at the 1300 and a move down. This price is the most accepted price in gold going all the way back to October the 24th, 2008. So it becomes a huge magnet, okay? And we're going in, we were balancing out, and they could not hold that 19 on that last try. And yesterday when they broke down through the 19, I said look for them to push down into the 14 level, and if that did not hold, the next move down to the 04 would fail, and we're coming down and failing the 1300, and I'm anticipating gold to come down into this 1290.80. We're in price discovery looking for buyers, and they're not finding them. They got to go lower, and it could even go as low as that 1280, 1279.50, which is the next big target below the composite VPOC. So gold is broken through a very key level and is in price discovery. So just caution on the long side. This is likely to come down all the way to the 1290.80. Does it happen today? I don't know, but it's possible that we get a big move today. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. For those that are visiting, if you're interested in checking out the live trade room, send me an email at quantumleapfutures@gmail.com. Again, there's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, in these pre-sessions and then in the RTH session. Everybody have a safe day, and we'll catch you tomorrow.